Hello, everyone. Good morning to you, and thank you so much for joining us today. I am Debashri Naik, Product Manager at The Wells Today. We are a B2B wealth and financial media network based out of Dubai, connecting stakeholders across finance, banking, wealth, technology, and emerging financial infrastructure through conferences, roundtables, research, and leadership content initiative. Today's discussion is a part of our ongoing program, the Wells Today exclusive roundtable series, where we bring together senior voices across the ecosystem to exchange perspective on some of the most relevant developments shaping financial markets globally. Our topic today is stress tested Gulf digital asset infrastructure under pressure. The idea behind this discussion is to explore how institutional ready the Gulf's digital asset ecosystem truly is today, from infrastructure resilience and liquidity dynamics to custody, regulation, and the evolving role of banks in enabling adoption. We are very pleased to be joined by an excellent panel today, Dr. Bhaskar Dasgupta, Chairman of the Board, Fundrock Investment Management Services Limited, and Global Head of Market Development at Apex Group, who will be moderating today's discussion. We have Dishang Patel, EVP and Head of Digital Assets at RAKBANK, George Carrasco, Managing Director, Blockchain and Digital Assets at FTI Consulting, Rohan Mishra, Head of GCC and Senior Executive Officer, ADGM at AMINA Bank. Thank you once again, gentlemen, for taking the time to join us and contribute your perspectives. With that, I will hand it over to Bhaskar to take the discussion forward.
Thank you very much, Debashri. So, just for the interest and knowledge of the who are going to be dialing in, we are recording this session on a very, very sunny Saturday morning. So I suspect that there'll be a certain level of informality, which I think is required. There are far too serious people out there talking very, very serious things. But my fellow panelists over here are, let's just say, a bit more relaxed, especially this being Saturday. So Debashri talked about, we are talking about digital assets and how the market is stressed. But before that, let me ask my fellow panelists to introduce themselves. Debashri was kind enough to give the formal title, but I like them to talk about a little bit about themselves and also talk about what their personal experience has been from a digital assets and digital infrastructure side. So let me start with Rohan. Rohan, your background is well known, but what's your relationship with digital assets?
Thanks, Bhaskar. So I've been in this space for over 7 years. My association with digital assets goes back to the inception of AMINA Bank, which is one of the world's first fully regulated institutions in this space. We are a crypto-friendly bank headquartered in Switzerland. Prior to that, I started experimenting with mining and just trading the tape in Bitcoin, in Ethereum, in the teens. But I guess, my background quickly took me to the more institutional side of things. And, at this point in time, I'm more responsible for looking at how we could, hasten the adoption of this asset class, bring it closer to traditional finance and make our offering a lot more seamless. Yeah, so that's about me.
Great. Thank you very much. Moving on, George.
Thank you, Bhaskar. Yeah, I think it was like 14, 15 years ago when I wrote my first article about Bitcoin. And as I'm passionate about technology and engineering, I was in love with the blockchain technology from that moment onwards. I have always been supporting enterprises and governments on their adoption of blockchain technology. And I was lucky 7, 8 years ago already in the UAE to start deploying this knowledge professionally across the different sectors. So 3 years ago, I joined FTI to do this full time because I was not able to do this part time. This is moving very fast. And then from that moment as well, so I started supporting more institutions in their responsible adoption of this technology. So in the financial infrastructure, so we've seen a lot of experimentation and innovation. And now I would say we are seeing more serious attempts to do this right and to do it battle tested somehow. So that's my story about blockchain and digital assets.
Great, thank you very much. Now let me bring in Dishank, who's got a rather interesting sartorial interests, which might skate over. But Dishank, over to you, my friend.
Yes, thank you, Dr. Bhaskar. Hi, everyone. So my journey started in around 2016 time. This is back when the the public networks and public blockchain networks were seen, as I like to call the devil, reference to a movie which some of you may have seen back in the day. The public blockchains were seen as that because there was so much sort of uncertainty, unknowns, etc. And actually, frankly, the blockchain wasn't really understood very well back then, contrary to the sort of, let's say, the inner circles of technology. Private blockchains were seen as the messiah and the answer to everything. And this is when JP Morgan first launched what is now known as Connexus. That was actually in 2017, I think. So, my experience goes back then and in different guises, because back then it was about how do you, essentially what we call tokenized deposits. Today, how do you use those to create more efficiency and reduce costs and all those fun things that we still try to do today. Fast forward to the UAE and today. So today I lead the digital asset business at RAKBANK. So everything and anything related to digital assets sits under me. But I've been fortunate enough since I've been in the UAE, just shy of 5 years now, to have been in the digital asset space across 3 banks, Emirates MBD, followed by CBD, and now RAKBANK. So I've seen the institutional, let's say, adoption's too strong a word, but probably interest grow over time. And I would say that, I'm sure we'll get into it in more detail, but at RAKBANK, it's been a much more hastened journey, as Rohan mentioned. Things move quickly, and as George also stated, it's too much to do if you're not doing it full time. So we're seeing other entities sort of enter the space more formally as well now, which is exciting.
Great, thank you very much. And just to add a little bit of more color on how I got involved, obviously the Bitcoin piece in London was quite a lot. And given the fact that I'm a frustrated inner trader trapped in a banker's body, I absolutely jumped into this digital assets world. Lost a bit. Absolutely. I find it amazing that crypto boys, like what we are, have this immense capacity for pain, which is quite interesting, both when they are investing as well as trying to make a business model out of it. But that's the joy of it. And since then, worked for the FSRA, and I would say that it was one of the earliest jurisdictions to roll out a fairly comprehensive crypto jurisdiction. And then 4 years now, I'm now gainfully retired. So I potter around investing in a variety of firms. So about 16 of my portfolio companies are involved in this area. I also advise several regulators ranging from Vietnam, Singapore, India, some in GCC, Israel, and Europe. And also for my sins, and I will keep on bringing this up a fair few times, is also I'm involved with several associations where digital assets is absolutely roiling the entire landscape, whether we're talking about stable coins, the FinTech Association, the Asset Management Association, and then we are incorporating a couple of more associations simply because we need to get the industry together. So a compliance association as well as a Sharia Asset Management Association. So suffice to say, and this is not just because of the current geopolitical crisis, and I will raise that in a moment. The world of, let's just say, finance and business is absolutely changing. And it is changing at a fairly rapid pace, extremely rapid pace. Coming from an, let's say, ex-banker who started his career in the last century, that just tells you how old I am. And in a way, in an attempt to keep up with the times, I even wore a T-shirt which talks about Bitcoin. but then looking at the digital assets framework from the multiple perspectives as of an investor, as an ex-regulator, as a person who's trying to get my portfolio companies make money out of it, to helping my members of the association make money. So this topic is absolutely germane. So what we have got over here as my panel is what I would call as the institutional leg. Look, I mean, the retail side has been doing quite a lot. The schools around the world have been trading Bitcoin and Ethereum and God knows what else. But when you're talking about institutional side, things are much more interesting, and you have to move rather slowly and deliberately. So what I'm going to ask my my fellow panelists one by one is, uh, there's obviously quite a lot of activity that has been happening. Bahrain has been doing this. Qatar has been talking about it. Um, Saudi Arabia is now discussing quite widely in this particular area. And then coming back to the UAE, which is perhaps in the forefront, you have people ranging from the RAK ICC. You're talking about DMCC. You're talking about VARA. You're talking about DFSA. You're talking about ADGM. And then, of course, the grand poobah of them all, CMA as well as CBUAE, are heavy into this. It's one of the strange circumstances where the regulators are pushing the industry to do more, rather than the reverse thing, which was, at least in my experience, you rock up to the regulator and say, this is what I want to do. And the guy goes, you want to do what? Uh, but in this case, it's different. So I'm going to ask my fellow panelists, it's not a question of whether the regulation is ready. I think it is. The question is whether the institutional infrastructure is ready for institutional participation. So, Dishang, let me start with you. Well, what are your views on this, my friend?
It's an interesting question, Bhaskar, because I think it depends on which part of the ecosystem you're referring to, right? As a bank wanting to offer or aiming to offer this to our institutional customers, what's become clear is there's three different types of access points to institutions wanting to trade crypto, and that I'm only talking about spot trading at this moment in time, right? And there's different types of access, right? You've got spot trading, you've got obviously derivatives and leverage trading, but you've also got the dreaded word DAT as well. People are starting to consider putting this on their balance sheet as an alternative to your traditional treasury products. But let me cover the primary one first, because those three areas of access, in my experience, in my understanding, are very simple. One is organizations and entities, and perhaps the larger they are, or the larger they are in this space, want to do a lot of this OTC because they want better pricing, they want better margins, they want better access to a white glove service. Then you have those entities which may be on the mid-tier or smaller side than the OTC players, who want access via like a web view, where they can have access to data and they can make better decisions. And finally, you've got those maybe the smaller players or the more agile players who want to have access via apps. So it's the point I'm getting at is it's a big ecosystem to address, and I don't think it's something that you can just simply say, oh, let me flick a switch and everything is ready to go. There's infrastructure to play, and let me roll and fold back in your point about regulators. Although I do agree, the regulators in this part of the world are very, very forward-thinking and very, let's say, proactive and pushing the ecosystem. Look, everyone's learning around the world. This is the reality, and I take great pride to say that I think a lot of what's going on with the Genius Act and the Clarity Act in the US follows a lot of the things that we are doing here and have done here beforehand, right? So that's definitely a moment of pride for the UAE, in my opinion, although it doesn't get called out in that way, of course, in the Senate and the House when they're discussing these things. But it's interesting to me because I think this is an inevitability. I think people are maybe putting their heads in the sand for now, but it's like everything else. I've been saying it for a while now, and I'll keep harping on about it. You know, we launched a brokerage platform which was for retail, but the reason this is relevant is because it's evolution. When you launch a platform for retail trading crypto brokerage, it's because it's an access point. And I think that access point, much like equity trading for every bank in the world exists, you're going to have to eventually offer your institutional clients something similar, no matter how big the opportunity, because that is the entry point to cross-selling, and that's the entry point to offering other products. I mean, just as a last point, I'll say Morgan Stanley this week announced that they're offering crypto brokerage or crypto trading to their retail customer base. You know, I mean, that is Morgan Stanley. That's no joke. Before that, there was only the, I think, 63rd largest bank in the US who'd done it at all, and that was end of last year. So I think the space, to your point, Bhaskar, is evolving very quickly, and I think institutions are definitely putting this on their to-do list.
Oh. I mean, I'm just going to pick up one thing, and then I'm going to ask George to and Rohan to comment. It is my firmly stated view that looking at what at least the UAE banks are doing, with you guys, with Fab and the people who have issued the AED stablecoins and the USD stablecoins regulated by the central bank, it is my belief that the Emirati banking system has a clear run on becoming the best banking system, at least over the next 5 to 10 years. I have not seen any other jurisdiction whose banking system is so much on point when it comes to crypto. But let's explore that. George, with your international experience and of course advisory note and long thought leadership in this area, what would you say is the institutional status of adoption in this part of the world?
Yeah, so I have to agree with all what you have said, and so in the Middle East, we have to think that so the banking institutions here are not like the tier one globally. If we are talking about the HSBCs, the Standard Charters, etc. So we have banking institutions that in terms of size and dimension, they are one level down. Let's say. That has pros and cons. So one of the pros is that they could be more flexible and they don't have that international dependency or dependency from the headquarters in other jurisdictions or in other countries to do certain stuff, and they are located in a region that, as both of you rightly said, is embracing all these innovations for very, very long time. So FSRA and then VARA, and they started with regulations around financial services supported by virtual assets or virtual assets related financial services, right? And then the Securities and Commodities Authority, now renamed as CMA, and the Central Bank of the UAE came later with like solid frameworks and regulations about all of this. So these financial institutions are based in a place where the regulators are embracing this. The other day, I was having a chat with one of my colleagues in other country, and we were talking about an opportunity for a new digital bank. And there were things that we still didn't know, and as Dishan mentioned, so there are certain learning curves we are going through at the moment. But when I said, look, I can sit with the regulator and ask about this. So that was mind blowing for my colleagues. The opportunity to directly request or discuss something with the regulator, where in other places, as you mentioned before, Bhaskar, is like, okay, the regulators in other places are saying, what do you want to do? Wait, this is not in the books or in the rule books now. So I think that's a very good thing. On the other side, obviously the benefit and the size of the upside for smaller banks is smaller, right? So that means that if you want to do tokenized financial products, if you want to do broker dealership, if you want to do things that are involving crypto tokenization, etc., obviously the upside when you have a a smaller volume of customers, when you have a smaller volume of business, is smaller as well. So that makes that all these decisions and all these thinking processes sometimes take more time. But the fact that we've been in a place, or we are in a place where banking institutions are knowledgeable about blockchain, are piloting these things for many years, give us a leading position in the region about all of this. Now, we are transitioning. We are transitioning from a experimentation and innovation phase to a phase where we are building products and services for end customers. And this is where we need to look into all the different ways in which this can fail, right? So in that regard, we have to start looking at compliance frameworks, at different types of risk, at interoperability, at all these kind of things that when you are piloting something and then you are innovating together with the regulator, with a internal group of customers, etc., you don't have to look into. So I think we are moving into a new phase where a lot of things that they are well established and well thought in the traditional banking system, now they have to be rolled out and discussed when we are talking about virtual assets and tokenization.
Great, thank you. Rohan, you obviously have got a very interesting vantage point with Europe, which has its own structure, and now here in the UAE. I would love to have your views, and if I may be that contentious, to perhaps compare and contrast the two banking systems that you are experienced with. Give us your views on that, please.
Absolutely. I think the reason why we are here is for the reasons Deshang and George mentioned, right? We found an extremely progressive regulator in the FSRA that also met all our requirements from an institutional perspective. And that was why Abu Dhabi was the first place AMINA landed after leaving Switzerland. And then, of course, subsequently, we expanded into Hong Kong, and we now have a MiCA licensed CASP in Austria as well. I think, notwithstanding what Deshang and George mentioned, there is a lot of regulatory innovation here across the different regulators like FSRA, VARA, also increasingly CMA and CBUAE. What we would like to see is some level of regulatory harmonization. I think the ambition should be to create an EU-style construct, at least within the UAE to begin with, enable passporting between the jurisdictions as far as all institutional crypto services are concerned, and then maybe, if possible, in a second step, take it to some of the other crypto-friendly jurisdictions who have a regime like Bahrain and others, right? I think that should be the ambition for the Gulf to create a single market, right? That is large enough for institutional capacity to come in and play. Having said that, I mean, the banking system in the UAE is extremely large. It's extremely profitable as well. And I think while banks have taken a first step in the right direction with respect to supporting crypto brokerage, custody, etc., there is still some work to do, right? For instance, are the banks in the UAE willing to accept crypto as deposits? Think of the large opportunity of a lot of native crypto wealth moving from elsewhere to the UAE and is likely to move here over the next 5, 10, 15 years for tax reasons. Can the banks here support that? The second question is, the UAE is a huge payment remittance corridor, right? And stablecoins fit very nicely into that construct. So would the banks here in the UAE be willing to commit their balance sheets, for instance, right, to intermediate settlement risk over weekends and so on and so forth? So I think these are some of the next things that we are looking towards. We are absolutely blown away with the pace at which the UAE has caught up. I mean, Switzerland was an early pioneer, but the time it's actually taken the UAE to reach where it has reached is literally half the time it has taken Europe. And I think many of you would testify to that, right? And I also appreciate the fact that the UAE has avoided over-regulation. And now we talk about some level of regulatory fragmentation. I think it's just about balancing those two aspects in a way so that we can get the large banks in the UAE a lot more involved and support the ecosystem.
Great. So you heard from the panelists as to what they are seeing, and I think these are very, very cogent arguments. So let me try and unpack some of the things that obviously have been exacerbated with the geopolitical issues. And of course, as I think all the three mentioned about the Clarity and Genius Act arguments that are raging in a rather public fashion in the US, and the fact that that other jurisdictions are also looking at this. I mean, personally speaking, I'm worried. I'm worried that 99% of all stable coins out there are US dollar denominated, and a substantial amount of institutional usage has moved on to that. That means that both the monetary as well as fiscal policies for less than developed countries, you are basically getting forcefully dollarized to a certain degree. But it's not trivial for you to have a local currency stablecoin simply because you need the legal structure, you need the banks to be open with, there could be deposit flight, and all those things that we are seeing the arguments break out is happening. So one of the things that I'm going to ask each of you is, tell me the top one or two stress points, or let's just say crossroads that this particular industry is facing for proper institutional adoption. So let me, since I have you on screen, Rohan, would you want to start on that?
I would say concentrated liquidity and the lack of sustainable fiat rails would be the two that I would point towards. I mean, these have obviously come up again and again. Concentrated liquidity is another manifestation of counterparty risk in the wrong form as well. So I think, in periods of market stress, you almost end up with the same OTC desk or the same trading liquidity venue. And even though you might have, let's say, surface level diversification in your liquidity providers, the real question is, where is the ultimate liquidity coming from, right? And I think in an industry as large as crypto or as small as crypto, almost all of these liquidity pools might converge at, beyond the surface. So that's something that we worry about, right? And we are watching that like a hawk at all times, at least our trading teams. And then on the other hand, it's also about fiat trails, right? Which sort of fiat trails might work or might not work in periods of stress, especially given previous episodes where things failed, and then most of the industry was bankless for a period of time. Now, obviously, we can enable that as a bank ourselves, right? So we can clear Swiss francs and euros, right? But we also rely on multiple correspondent banks and counterparties for other currency rails. And I think evolving risk appetites in these periods of stress from our correspondent banks obviously have an impact on the institutions we support. So that's more of an indirect risk.
Great. Dishan, your views, stress points, top two?
Yeah, I mean, I can't disagree with what Rohan has said, but I'll keep it much more simple. I think adoption is the biggest stress point. I think showing the ability to adopt and the willingness to adopt for people like us who talk about this industry in favorable terms. I think getting the other big banks in the country and the region involved and doing more, which they are, which is great to see, but I personally want to see it more than just surface level, right? How does that adoption translate to something tangible? And this is where the points such as liquidity and fiat rails and things like that become more prominent. But so that's maybe number one. Number two is the age-old problem of interoperability. And I think interoperability is going to be the key to all of this, in my opinion, because if you want to create this ecosystem, which is, doesn't have a top, middle, left, right, to the point you raised before, Bhaskar, which is, in the next 5-10 years, if I dare to quote you, everything's sort of going to be on these rails. I believe the same, but I think everyone on this panel is very biased in that sense. I actually think it may be less, but the ultimate point is that a lot of these institutions are already using these US dollar stablecoins in one way, shape, or another. So this is why I'd mentioned my first point about adoption. If we show the adoption as an industry from a financial perspective, and we give accessibility to that adoption across interoperable networks, I think this becomes a unstoppable force. Of course, governance and regulation and all that kind of stuff has to follow. But that's why at the beginning I said a lot of this is an evolutionary thing, and everyone is evolving together. And I think this is the key to success.
George, your views on the stress points.
Yeah, the first one is the same one that Disham mentioned as the main one, which is the interoperability. We are starting to see cross-border treasury, tokenized deposits or financial products, trade finance, real assets, settlement, programmable escrows, right? All these different components have to start talking to each other. And then the second one is more operational playbooks, because we are moving from a situation from a landscape where banks are dealing with reversible transactions, permissioned ecosystems, intermediary-driven frameworks, right? To an ecosystem or a landscape where we are talking about irreversible transactions written on chain, programmable money, global frameworks, or always-on infrastructures, right? So all the operational playbooks, all the internal risk committees, all the different controls have to adapt to that, because we've seen how largest crypto exchanges, etc. So customers are calling them because they have been victim of a scam, and they say, and sometimes it's like, okay, we have put a lot of controls, but sorry, the transactions are irreversible, right? So how the new financial the new stage of financial institutions is going to adapt to that. So interoperability first, but also like strong operational playbooks that learn how to deal with the new challenges that the new technologies are bringing to the table.
Great. I'm going to now go into the banking sector. I'm going to most likely make you guys go a bit pale, but then I'm semi-retired and I call myself as the chief mischief officer, so I think I can get away with it. At least I can. But I suspect you guys have to be a bit more polite. My feeling is, and I've said this many times, and I'm going to say this again next week in London at this FT conference, and it is my firm belief that banking is going to stay, but the current banks that we see around the world, not so much. I think the way the banks work has to change, and has to change dramatically. And it's not because of technology adoption. It is because the people in the banks are still not on with the game. I mean, we set up a banking committee within the Stablecoin Association, and we have, I think, about 20 banks in there. And looking at it from a perspective of a person who is a banker at heart, I ran an analysis across my entire portfolio and investments, and there's about 14 to 15% direct investments in the banking sector. So I'm personally invested in it. So call it as a person who's talking as a banking investor. I'm worried. I'm worried because I know if banks are not up to speed, it can cause quite a lot of issues when economic crises happen. And if they're joined with a banking crisis, that's a terrible thing. That's what happened during GFC. And as an ex-banker, I am very worried about the revenue leakage. If we don't move fast, as I think Rohan and Shank, both of you alluded to, the smaller, nimbler, non-regulated or lightly regulated entities are going to walk away. I'll give you an example. 3 weeks back, I invested in a firm that is tokenizing loyalty points. Right. They have cracked the interoperability issue of an item which lives on balance sheets. And it's a very large piece. It's just like what happened in the gaming sector. Quite a lot of economic activity has just crossed away from the traditional the banking and the economic rails. My son spent days working on getting enough points on World of Warcraft so that he could buy an armored bird for his girlfriend. The point I'm trying to make is this economic activity is not getting captured within the banking system other than me paying through my credit card for his subscription to World of Warcraft. And this is 15, 18 years back. So the point I'm trying to make is that I am very chuffed as to how the UAE banking system has got on with things. There are very few banks out there who have forget about they're out there issuing stable coins, rethinking the processes, talking about the people. So I'm going to come up with and ask each of you about why you guys, what makes you different that you are on the forefront of banking, let's say, revolution, if you will, that I have Disham, who's the head of digital assets, a role that didn't exist till a very few years back. Rohan is talking about setting up here where the regulators are there, and he's got some ambitious plans. And then, obviously, George, I'd like you to comment on from your outside perspective, what are you seeing on the banking sector? So, Disham, if you will, please.
Yeah. First of all, thanks for raising the point, Bhaskar, because I think this is a really important point. And I'll let's say attack it from two different angles, top to bottom and bottom to top, right? Top to bottom, the reason I say top down is because ultimately the adoption and the mindset that you refer to comes from leadership. If the leadership has the right mindset, it will happen. And no one, look, Rome was not built in a day, as we all know. The truth is that you have to be in the game. As they say in the UK, you have to be in it to win it, right? So if you're not in it, you're not going to win it. That's a simple fact. So it has to start at the top, and that vision, and I'm very fortunate, right from the very top, I have very supportive leadership. I have very visionary leadership, and I think that's where it starts. And then from the bottom up is, how do you make sure that you are addressing the actual pain point, right? How do you address the actual need? How do you understand that? And to me, that's looking at not who's banking today, who is going to be banking in 5-10 years time. Gen Z, Gen Alpha, they're all coming to the economy. They're all earning. We are creating this for them. Yes, there's dinosaurs like us who also are involved in this space. But the truth is that, we're only going to be around for a very relative short period of time. And then just to connect those two, how do you make sure that what you're building, you're picking, there's no right and wrong, first of all, but how do you do 1, 2, 3, 4, and which order you do it in? That is very specific to the bank, because there will be, or the financial institution, there will be certain things that they're very strong at and they may not want to relinquish. There may be other things they're willing to experiment on. But I really believe, and I have one, not that I will ever share it with anyone, I have a roadmap. I have an ecosystem what I want to build across this, because I believe this is where it's going. I believe that this is the future. And like I say, I think from a top-down and a bottom-up perspective, as long as we address those, the interconnectivity between those, I think you're not going to lose. Of course, it takes time to do this stuff, especially because we're working with traditional banks, traditional rails, in some cases, not ours necessarily, but in some cases, draconian sort of setups when it comes to tech. It plays a massive part. So, adoption isn't only about desire, it's about execution of that desire as well, which is always, unfortunately, the reality is it's not as quick as you'd maybe want. So I think it's not quite a binary answer. I think there's multiple angles to this, but I do think it starts from the top, and I do think we need to have a perspective from the bottom as well.
Very good point. Rohan, your views, please. I think you are one on the top. So,
Yeah, I mean, we're trying our best, right, to wave the flag as hard as we can, right? The genesis of AMINA Bank happened on the foundation that we wanted to bridge traditional assets with digital assets, and we were a crypto-friendly bank from day one. But in hindsight, it's much easier said than done, as Dishang was mentioning. Of course, you need the leadership to be there, you need the regulatory support, but then the plumbing also needs to follow, right? I mean, handling this different asset class is quite a task within itself, right? I mean, when you look at crypto, upgrading your compliance functions, reflecting these assets in your bookkeeping, in your core banking systems, making them interoperable across all the asset classes or products that you offer. Many systems weren't simply ready even at the time when we started. So we actually had to work with these providers, help them understand the asset class, and get to where we are now. But I think it boils down to also the fact that what the overall risk appetite of the bank is, right? I mean, we see a variety of banks who are now considering moving into this space. It's almost always going to be a decision around build or buy, right? I think there are some things that you would be able to build internally, and for the rest, I guess guys like Deshang and I would have enough of a head start to be able to help.
George, your views, please. Looking at the banking sector from outside and obviously advising quite a lot of them, what's your thought?
Yeah, before stable coins were a thing, like 3-4 years ago, I was in a conference and I was asked, like, what do you think about the banks in the coming years? And I said, like, I said a time horizon of 10 years. Probably that was too long. I think it's definitely shorter than that. But what I said is that any bank that in 10 years doesn't have a internal experimentation team, a digital assets lab, a lab that is constantly testing what's possible, what are the edges of this technology, will be disrupted. Also, any bank where their compliance and legal team doesn't know perfectly about all of these and knows how to navigate all the risks and implement all the risk controls about this will be disrupted. And also, any bank that is not taking seriously who to partner up with for these things. One area is to have the internal knowledge, right? So onboard people that can lead this, that understand this, that this is their breadth and depth is very critical. But also, I mean, you can build an entire team internally, but also you can partner up with people that can support you, be it professional services, be it strong technology partners that have done this all across the world or for other people. That is very critical, and banks that do not do this will be disrupted. I also agree that this needs to start from the top. So I have two examples. I have been dealing with a large bank for a very long time, that we have gone through endless rounds of, tell me what are the use cases for this, tell me how can I use this, and it's like, okay, just subscribe to the words blockchain, banking, global, something like that, right? And then you will see every single week large financial institutions that are doing this, and it's not me saying, like, okay, this is the future, this is coming, this gives a flexibility and opportunities for financial institutions that were not there before. Just look outside your organization, what is going on in the world, right? And then another discussion that I was having this week, and in the context of the regional conflict and all of that, right? So we've seen in these situations how moving value, doing transactions, etc., becomes more difficult, right? So having these digital assets or virtual assets rails to move value is proving you or is future proving you on for these situations, right? So it's not so I was saying that you don't want this situation to go worse or to come to a situation like this, and then this blow up in your face because you cannot move money, move funds, release funds from a different jurisdiction, and things like that, right? So implementing and knowing how all this has to be integrated with your systems is key to be future proof, let's say.
So look, dear audience, you've heard this from everybody. I mean, sitting where I am as an investor on the board and an ex-regulator, I absolutely agree. I think about 10% of the banking CEOs get this across the world. 90% have heard about this or not have heard, or they are nowhere there. This is what I mean, and I'm being very brutally honest over here. We are indeed very privileged to be in the UAE, where the regulators are pushing and there is an ecosystem, etc., etc. And I would encourage you folks to come and speak to us, because I think it's only when you get everybody together and start talking that we can start coming up with a more resilient and progressive banking system. So I'm conscious we just have about 5-6 minutes left. Enough of pessimism and things like that. Let's talk about the future. And I'm going to ask each of the participants if there is one thing that we wanted to do. And Rohan, I'm afraid I'm going to ask you to use a different one rather than the one which you used before, as it the unified GCC frameworks, because I'm sorry, you have already played that card, so you'll have to come up with something else, but I'll let you go last till you think about it. But one major thing that let's say the banking industry or the wider network can do to improve institutional adoption. So George, shall we start with you, please?
Sure. So I will start with what I started at the beginning, that we are transitioning from innovation to execution. And so in the Gulf, the financial institutions are really, and the regulators, with the support with the regulators, they are truly building the foundations of the next generation of financial infrastructure. I think that the winners are not the ones that started innovating first or the fastest innovators, but the institutions that really combine that innovation with resilience, governance, and interoperability. The ones that are really implementing the risk frameworks and the governance frameworks that will put this fail-proof and really perform well when things go wrong. So I think that we are entering into that phase where this is very, very relevant.
Great. Thank you very much. Dishan, your views, please.
Look, I'm a simple guy, Bhaskar, and I will keep this very simple. And it's one of the things that you touched on, which is, and I'm again quoting you, in your view, 10% of the world's CEOs of banks understand the potential value of this. And I'll keep it very simple by saying there's two things which are interrelated. One is education, and two is upskilling. Look, I always say to my team that anybody who works in the intersection of banking and blockchain, and I use those because they start with the same letter, just sounds cooler. Anybody who works in that intersection, that Venn diagram, as far as I'm concerned, you're a unicorn today. People just don't exist. And the reason they don't exist is because everyone is maybe not focusing on it enough. So if we had the ability to educate, which is what we do on a day-to-day basis, all of us, I'm sure, whether it's you via the AMINA FinTech Association's sort of set up on blockchain, whether it's me internally, whether it's Rohan talking to his customers, whether it's George talking to banks around the world, everybody is educating. And why is this so important? Because unfortunately, the stigma from the beginning has been negative. And a stigma by definition, of course, is negative. What I mean is that to get over that negative, let's say, mindset, you need to upskill and give people sort of knowledge to be able to come to their own rational decision making. And that's why I think it's such a simple solution to begin with. Start bringing in, the younger generation, the grads of this generation, who are inherently interested in this. Bring in people to train and upskill and educate, all the way to board level. Why not? I mean, this is not difficult to do. There's plenty of people out there in the market who can help you do this. So I will leave it there, because often the most complex problems are solved by the simplest solutions.
Great. Thank you very much. Rohan.
Yeah. Start with crypto custody. Just offer crypto custody to every bank. Should step in and offer crypto custody to its users. It's the easiest and the first best place to start. Interact with the blockchain. You end up doing a huge favor to the world, regardless of whether it's retail or institutional, in terms of investor protection. Brings a lot of legitimacy to the asset class, and then take it from there.
Great. So I think we are bang on time, and I could already feel Debashri getting nervous about me going forward, especially with an old man like me who's got a propensity to bang on. Look, I've got to give a huge thanks to all the panelists. As you would have seen, this is not your normal panel where you would have rather set-piece speeches, but we had a bit of a conversation, and I think it might be because we are doing this on a Saturday in all our sartorial magnificence. So I really like this panel. We had a good discussion. Hopefully the insights would come out and people can use it. And please, a plug. I think we need to talk. Reach out via Wealth Today, or look us up on LinkedIn. Come and talk. I think we have an amazing opportunity to build something amazing over here. So thank you for your patience. And let me hand it back to Debashri.
Well, thank you. That was a fantastic discussion. And thankfully, the Gulf digital asset infrastructure survived this stress test as well. So a big thank you, Dr. Bhaskar, for moderating such engaging conversation, and Dashang, George, Rohan for sharing such interesting perspective. It's not often that you get banking, advisory, institutional viewpoints in one room discussing this digital assets. So thank you once again, and wishing everyone a great day ahead.
Great. Thank you.
Thank
Thank
you.
you. Bye-bye.
Thank you.
Bye-bye.